Good afternoon, everyone. Welcome to the Daily Market Update Show, and this is where I break down QQQ as well as S&P 500 and the big six tech stocks. That would be Nvidia, Tesla, Apple, Amazon, Google, and Microsoft. So the six tech stocks will give us a better understanding of how QQQ is going to be moving, and that will give us also a better understanding of how SPY is going to be moving because they are correlated. And today seemed like a big red day today. QQQ down 1.3% and SPY down 0.5%. But we got to zoom out to the bigger picture and to see that we are still in a very healthy daily uptrend. But there is starting to have some cracks in the lower time frame now. So we'll take a look at that to see if we are going to get more downside in the market, or that we may potentially, set the bottom of this drop and bounce. So we'll take a look at the lower time frames in the charts. All right, and I've put the timestamps below so you guys can just jump to any tickers you want, whatever stock that you want to look at, and those timestamps will be there. Let's take a look at the sentiment data first. So sentiment data, we'll get this data tomorrow. See what this week sentiment is like. So if we get another read that says like in the 40s, then we're getting quite tight. Hence, I was talking about that when we get 2 weeks of bullishness in the extreme side. The likely scenario for the third week is a sideways to a slight dip action, because market just don't just drop, right? It's billions of dollars traded every day. So markets needs distribution zones or accumulation zones going sideways before it makes the next big move. Same thing as fear and greed index, extreme greed. So we'll be a little bit cautious on the bull side. Let's take a look at the market now. So QQQ on the 4 hour yesterday, I talked about us potentially having a 4 hours head and shoulders pattern, which is a psychology behind that is a uptrend into a downtrend. So this is the left shoulder, this is the head, and this is the right shoulder. So now we have a 4 hour downtrend. And we did break this neckline. It's not a really perfect textbook looking head and shoulders, but you get the idea of it being from a uptrend into a downtrend. Essentially, what a head and shoulders is, just like an inverse head and shoulders, is one that was from a downtrend going into a uptrend. That is essentially what an inverse head and shoulders is, just the opposite of the head and shoulders. So that's what we got today, and you can see right here, this is the first move, and that's the pivot, meaning this bounce. This candle was above the prior candle, so that sets our lower high. So this is our pivot, and now we have broken the prior low. So that's a 4 hour downtrend confirming on QQQ. And so now we got to zoom out and see what it looks like on the daily. So on the daily time frame, now this pullback is big enough for me now, 3.17%, where potentially the next bounce, if it's a shallow bounce and it sets that lower high here, then we can potentially shape up a daily downtrend. But as for now, we don't have any of that yet, as we're still discovering where the bounce is going to be at the moment, because all we did was drop to the low of the day until the end of the day. So we don't have enough time to see where the bounce is going to happen. And we'll get a better understanding when we look at other stocks like Apple. Apple is still holding really strong. So if Apple doesn't roll over, QQQ is not going to roll over either. So in a second, we'll take a look at Apple after we do the SPY QQQ. And so right now, QQ is still in a daily uptrend, right? Surprisingly, after it feels like we had 3 days, kind of like small red day here and small red day here. Now we have a slightly bigger red days. 1.3% is not that bad. Feels like it's been 3 days where it's dropping and we're still in a daily uptrend, right? So, right, just take a look at this. Move up, move down, pivot, continuation of the uptrend, pivot to set again, continuation of the uptrend. Now we're seeing where that pivot is going to set, right? This is just a small drop, 1.7%. So the next bounce obviously is going to give us continuation of the bull move. Just like this one over here, wasn't that big, continuation of the bull move. And now this drop is starting to shape up big enough where it could potentially, that if that's a shallow bounce and the bears start to add on this bounce, that could potentially shape up a daily downtrend. So that's what I will be watching to see when we get to 12 EMA, do we bounce off of it and how large that balance is going to be, right? So what we do is we will look at the Fibonacci retracements. So we just pull it from the top of this move. That's not what I wanted to click. Top of this move into the bottom of this move. So let's say this is our bottom. Say tomorrow, we bounce off of here. And where would the bears want to see us bounce and reject? So that would be within 0.382, meaning from this top of this move A to the bottom of this B move, we only retrade 38% of this entire move. When that happens, it's a bear flag on the daily time frame. Meaning, if we don't get over this 0.382, it's a potential bear flag. So it could chop that only if it bounces to 0.23 only. That's obviously means bears are stepping up their game. And if it still goes to 382, it's still a potential bear flag. So we'll see if that happens or not. Obviously, if it bounces to over 50%, meaning we retrace over 50% of this A to B move, then the most likely scenario on the next drop, there's big enough room now on this bounce where we can potentially gain back that upper momentum. So now it's still in a daily uptrend. So obviously the bulls are likely going to buy this dip. But once we start to shape up more cracks in the market, then potentially they may step back. But as of now, this is technically still a healthy pullback overall. As long as we're still holding above the prior pivot, this is the prior pivot. If we don't break this pivot, uptrend is still intact at the moment. And we still are above the 12 EMA. So that's still very healthy for QQQ. You can see this 12 EMA is going to be our guide. So we'll see if it continues. Right. See that head and shoulder. Technically, we can have the neckline here, but I want to see us break below this 358 level back to into this range again for the bears. For the bulls obviously we want to confirm back our uptrend back in the hourly. Very first thing is always the hourly. So it's hourly downtrend is our guide. Currently, this hourly downtrend is going to be our guide. So we continue to break today's low. That's going to continue. What the bulls want to see is bounce back, break above the prior pivot, which is this one right there. It's high. That would be 364.5. So that's the very first step the bulls want to break above this pivot high to negate the continuation of the hourly downtrend. This continues to break this low right here, this 360 low, 361-ish, then we're likely going to come down to test these levels. I would say this is probably more substantial here. I don't know why that orange line is over there. But yeah, so we're likely to come down to test this level. You can see there's no volumes traded here. So if we do break this this support right there around the 361, we're likely heading down to right here in a very quick drop due to us not much volume traded. The more volume traded in that area, the more resistance or support it becomes. So we'll see. We'll take a look on the daily. Yeah, it's not much volume traded in that area either over here back in the history. So that's likely going to drop back to that level where this was prior level top. But before that, we got to break the 12 EMA first. All right, let's take a look at SPY. SPY's head and shoulder is actually a lot more like a textbook than QQQ. You see this, we talked about the same thing yesterday. Left shoulder head, and then this is the bounce, and now we just close right on it. So tomorrow we're gonna break or not? We'll see. It kind of looks like a middle finger, but maybe that's why it's a bearish pattern. So we'll see if it breaks this neckline, and that'll be 435 for me. And obviously, want to see a confirmed break means that we have a forward candle that's closed under that 431. We did bounce off here twice into the end of the day, and say we don't have enough time in the end of the day, so we'll see. If we do break that, then you can see that there is not a lot of volume also traded in this area. It's just a straight move up. So we do break that. I'm looking down right at this 431 level, where it is act as prior resistance. Now it's going to act as support. And it probably will come down pretty fast if QQQ also drops together. Then I'm back looking at this cluster right here. So that would act as a support zone would come down to it. Support and resistance is not a definite number. Now we say zone, so likely be this zone right here. So we'll see if that neckline for SPY breaks. If neckline for SPY breaks, it will probably drag down QQQ as well. And so it's like momentum for each other. Like when QQQ was going up, it's dragging SPY up, and SPY just helps QQQ just helps SPY break resistance. And when SPY break resistance, there's more momentum on SPY, and then it gives more momentum on QQQ, and it just like this whole thing just keeps on going up. That's how the momentum works. So if SPY breaks this support tomorrow, right, it's gonna give momentum for QQQ to go down lower, and then when QQQ go down lower, SPY gonna go even lower. So that's how the momentum works on each side. So we'll see if that neckline breaks tomorrow. And for you bulls, obviously that would be the level you want to bounce off of. Pretty much we're sitting right on top of it and close right on it. And if we do bounce from that level, then let's see, which level would I be looking at? I wanted to see us negate this hourly downtrend, continuation of the hourly downtrend. So that would be to break this pivot high. So that would be 437 exactly right here. So if we do bounce tomorrow and break above this pivot high, we have now changed the hourly trend change back to the bulls, to the uptrend. So now it's an hourly downtrend. So if we continuation of the hourly downtrend, just means we'll break today's low right there. That's 434.34. Very first step for you bulls and bears. So we'll see. And if we do confirm back to hourly uptrend, then it's just this cluster and this cluster. Same levels to work with. Over this level before testing the all-time highs cluster level again, because there's not a lot of that much price action above just in history. So we'll see. Because we zoom backwards, we're testing this structure right now, in this structure. So those levels are the ones I'm looking at in SPY. I'm more concerned about the recent price action at the moment. We do break that and just straight through and into here, and that's it's going to start to act as a red flag, because these drops now it's going to give us enough room for confirming a daily downtrend, maybe a weekly start shooting up. So until we form a daily downtrend, we don't have one for the weekly yet. So weekly consolidation just means the next week low of the next week's candle is going to close below this week's candle. We still have 2 more days this week, so we'll have to wait before we start to look into the weekly time frame for potential weekly consolidation. All right, let's take a look at Nvidia. Nvidia, yesterday I drew this rising wedge while we were looking at this together. So the rising wedge, psychology of rising wedge just means buyers buy and hits a new high, and then everyone's like, oh, it's too expensive. It sells off, right? It takes profit. Buyers buy, hits a new high, higher than prior high, and there's just no more buyers left. It's just too expensive for people to want to buy. Same thing. Bounces again, hits a new high, just a little bit higher than the previous high. And it's like, everyone's like, oh, this is too expensive. I don't want to buy here. And essentially people just take profit and sells off. And at one point, there's going to be no more buyers left at these high prices. So that's how a rising wedge psychology works. And essentially that's what happened today. And at this level, there was just not a lot of, no more people want to buy anymore. And so supply outweighed demand. And now we had a big drop. So we broke through this rising wedge bearish right here in the morning. And you can see some bear volume coming in. When we head into the 15-minute time frame, you can see just right here, when we broke through it, you can see that there's all these bear volume coming in. Although we did bounce off of it. So we bounced off of it and came back into it. So that means it's a retest. So that's what you want to see when it breaks the resistance and it comes back to retest that prior support, now becoming resistance, and we reject it from it. Meaning we close outside of that. And you can see the upper wick means this candle closed over here. And we reject it from that. So for the bears, we want to see continuation of that to form a 4-hour downtrend for the very first time since we had a 4-hour downtrend here slightly, but it's been some time for Nvidia to form a 4-hour or even a daily downtrend since forever. But so let's see if the bears can continue. We are slightly red after hours. Let's see. I wonder if there's any news on it for Nvidia to be read or just technicals. Let's see. I'm guessing it's just technicals because of how overbought it is, and we broke bearish through this pattern and retested it, and now we have potentially started to reject it. So tomorrow, continuation of the bears. The very first place I want to see it break is this today's low to confirm a forward downtrend. For the bulls, obviously you want to get back into this rising wedge tomorrow as soon as you can, and potentially continuing up with that psychology of rising wedge. But I don't think that's going to happen due to QQQ starting to pull back, and the QQQ is pulling back. It's going to weigh on Nvidia, especially at this level, this high up. Rising wedge is usually a bearish pattern, but yeah, if I had to bet, I would say I would bet more bearish here than bull, but it's Nvidia, so we don't know. We never know, right? The thing just, you could have said it over here. You were gonna bet more bearish down here than bull, right? Next thing you know, this thing's up another 40%. So, but as of now, the technicals are starting to show a little signs of weakness here. So, if it continues, then you can start shorting. You can start shorting here, but just set a stop loss over this prior resistance over here. So if it gets back above this FAR candle, which is 434.62, then obviously bulls are taking back control, right? And you don't want to hold this thing when you're shorting at the wrong side. So you just get stop off for a little bit of a loss. But if you're right, we may roll over back down to this structure and test this structure to bounce from that structure. There's not a lot of volume trading in this area as well in this area, so it should be a quick drop when we blow through that 420 level, 421-ish. All right, let's take a look at Tesla. So Tesla is going to be is looking a little bit like a blow off top, and this is a bigger for our head and shoulders than QQ due to its volatility. You can see if we come down here, we're likely to potentially bounce. If it's a shallow bounce, only bounces to here, then that's a potential head and shoulders forming up. So we'll see if it actually bounces here, because this is quite a notable drop from top to bottom. It's a 7% drop. So the most likely scenario of this next bounce is going to form a lower high because due to the size of its pullback. And yeah, so let's see if the Tesla bulls can buy this dip. And if they do bounce over 50% of that move, then it would start to shape up like 50% of that move would be over here. Then that would start to shape up chance for the bulls to take back control again. But if they only bounce shallow to here or here, that potentially be a bear flag for our bear flag, as well as the hourly. So we'll see if the bulls can negate that tomorrow, or otherwise the bears might take over here. And it's not that big of a deal on the daily time frame. You can see, even though it does look like a blow off candle, we have ran 70%, right? It needs to take a little bit of a break before he even wants to make another move. Some sideways action, right? So we come down all the way here, right? Bounce, chop around here, give it a little time, sideways action before it decides to want to break above, higher, or lower. So that's what we'll see how it shapes out into later this week. Give us a better understanding on the weekly time frames. And Apple, still very healthy, 0 red flags. That 2-day EMA 12 is what I've been talking about over and over. We have not even tested it yet. And you can see 0.5% drop for both days, right? And we even bounce off of it too, this prior little support. So absolute 0 red flags is the strongest tech out of all of them. As long as Apple doesn't roll over or even test these levels, then it's a good sign that QQQ may just be a healthy pullback and continuation upwards. So let's take a look at Amazon. Amazon's a little bit more of a red flag, this cluster here. We did bounce off of this EMA 12. Bounce off here and got through it, but came back, closed above it. So tomorrow, what I don't see for the bears is to break below that EMA 12 and close underneath it, and potentially break this level right here, 123. You can see we have tested this right here, right here, right here, right here, right here. So those 4 levels there for me at 123.4. Amazon. And for the bulls, I want to see us get it back above this 125.62 level due to we rejected from here 4 times prior. So Amazon is in team middle, and So we'll see if Amazon is going to be joining the weaker techs like Google, which we'll take a look in a second, where Google already formed its daily downtrend, the very first weakest tech stock. So Amazon right in the middle, and if Amazon starts joining Google on the weaker side, we got to ask ourselves: is Microsoft, Apple, as well as Nvidia going to start joining the weaker side as well? And Tesla also is quite weak today, even though it's been stronger than the rest of them the past couple weeks. All right, so see if it breaks this level support right here, prior to this 123 level, it's going to go down to here, this 120.84 level right there. It was acting as prior resistance here. You can see we're below it. Now we're above it. So if we come down here, it will likely be a support. Now still far from that level. So we'll see. We need to break this one first, which is 1.6% away and 3.2% away. For the bulls, you want to get back above this one, which is 2% away. So they're all very close by. All right, let's take a look at Google. So Google, I've been talking about Google being the weakest of the weakest tech stock for quite some time. And due to this chart showing us the weakness right here. So when it was June 6th, this bull break should have been able to bounce off of right here, this as support. See this rejection right here, rejection, rejection, rejection. So that rejection 4 times. So when you finally got over it, this drop should have bounced right there. And for Google, but we came right through it, back to the low of the whole range after we bull break. So that was a red flag for me. I was talking about it here, where very likely Google is going to be the weakest tech stock out of all of them. And now it has shaped up a first daily downtrend. So this is the initial move. Now this is the bounce. And now we have broken below this prior low right there on the pivots. So now that's it. Daily downtrend confirmed for Google. This is the very first tech stock that confirmed its downtrend on the daily time frame. And where we're going to be looking at now. And there's not a lot of volume traded here on Google. As you can see, it would just say straight shot up. So if we do break this candle that's floating right here, that's pretty much the only support we have around this level. So let's just put it, I'm going to see. That also coincides with this. So, yep, you can see not a lot of volume trading in this area. So nothing much here, nothing much here, nothing much here. Hence, we shot straight up through it. So when we broke these two levels right here, this 119 to 118, you can see we just shot straight up to this level due to how low the volume traded. Meaning when we are going through these levels, it's a lot easier to go through them because of the amount of volume traded is so thin, these levels. Same thing when we come down to it. So it'll be a lot easier to cut through it either way. So when we're going up or down through these levels, it's going to be easier for the action to happen. So now we are pretty much at these levels. So let me actually take a look, see how much volume is in traded these areas. Fixed volume profile. We're just going to do this little cluster here. Yeah, it's not a lot of volume, to be honest. If we zoom in, we can use this value area low right here. That is already that 119 support I was talking about earlier. And this red line here, which is the POC, which is 120, which coincides with this one pretty much, the low of that. So we can just line right close to here. And we'll see. This 120 level is also a psychological level. Even though this is 121. So yeah, roughly 120 psychological level. Support resistance is not a definite number, but we can use this zone, as well as obviously want to break today, the low of today for the bears. For the bulls, you want to see us get back above this 121.5. So if we just straight shot back up into this chop zone, it means it's the exact opposite of this, but on the bearish side. So that means it's a bear break, zero follow through, bull bought the dip, straight shot back into this chop zone, just like this. Bull break, nobody's buying, bears took over, straight shot back into the zone. So that would be a good sign for Google bulls if we do just straight come back into the zone tomorrow above. Most ideally above this 121 is the very first you want to get back. If let's say tomorrow we bounce in the morning and it's just a very shallow bounce and nobody's really buying anymore and QQ is weak, then you're gonna probably test this 121, 120 level pretty much. And if that breaks, then yeah, we're probably gonna just straight shot down to 118. I don't even know if this 119 is gonna hold because there's not a lot of support. But let's take a look a little bit deeper into it on the hourly chart, see how much it's gonna hold or not. Let's see here. Yep. Let's see, not a lot of volume trading. It's just a little cluster here. So when we do chop through that, then yeah, that 120 is the most key for me. So we do break through that, then 119, low of this range. If we break that, then we're gonna straight shoot right here. See, this is just one candle, nothing there. Now we're gonna go to the right here, this zone. Top of this zone is right there, 118. And the bottom of this zone we'll probably revisit tomorrow because I don't think we're gonna straight shoot all the way to that bottom of that zone. Yeah, it's 3.5%. But who knows, right? We had a 3.5% day just once over here, but it's been a while. If we do that, then we're looking at this bottom of this range for the support zone. Yeah, that'll be looking like a big U-turn if we do start breaking down there, because there's not a lot of supports on the way up except this cluster for Google, and so we do come back down, then we're likely going to come down to the top of this range. It will act as strong support, especially if we over here. It's 119 level, because I don't think we're going to break back down to the into this range that much. At least it will hold in the top of this range for now. Unless the whole market rolls over, because otherwise, QQ stays strong. There's no way we'll break through into this range, low of this, especially low of this range. But we'll see if we can even break the top of this range when we come close to it. I will give you guys detailed breakdown on this range when we come closer to it. All right, let's take a look at the last one, Microsoft. Microsoft. I was talking about it yesterday. Where now, if we get another red day today, the size of the pullback now will give us enough room for bears to scalp that lower high. And so let's take a measure of this move from the top to the bottom. 5.4%. That's quite a notable drop for me, especially a mega cap tech stock like Microsoft. These guys are in the trillions, so 5.4% is substantial. And we have this essentially looks like to me is a bull break into all-time highs, and nobody wants to buy anymore up here, right? Excited at the sideways range where it was, accumulating, consolidating, fueling up for its next move, and boom, we broke here. A nice one-day move right there when we broke out of that prior top. Now we made a new high on last Thursday, and everybody came in to buy on that Thursday when we broke that new high. And then that was it. The party is over. Next day, we came three days down, straight down into it. So that is what essentially a blow-off top psychology is like. We have a huge break and not a huge drop into the next day. Sometimes even the same day, big day up, and you just see a huge upper wick on the same day. So now we're back to testing this structure of all-time high past structure in 2021. As we actually broke through this red looking line, point of control today, this morning, that quickly. So I'm looking back down to roughly here, this range. But before that, we might get a slight bounce before that happens. So if you're looking over here, that's low of this cluster range and this cluster of this range. But in between that, we're probably going to bounce over here, is my guess. This 330 zone. If we gap down tomorrow, 330, likely a bounce over here and potentially retest this 335. So my guess is we drop, bounce, retest. If we do reject that and bears hold this defense, this level as resistance, then the most likely scenario we're coming back down to test this support again and break through it. If we break through it, we're obviously going down here, and that would form also the very first daily downtrend for Microsoft since yeah, or since over here, daily downtrend right there, since beginning of 2023. That's been a while, so that'll be notable for me. We almost had it for the Bears here. Big enough drop. That's what I'm talking about. The shallow bounce. Bears took over again because of the shallow bounce. And now we couldn't even break that low right there. See, double bottom. So daily down, trying to negate it. So this is the thing I'm talking about, how the size of the move always is important. Because of how big the size of the move this one is, and the bounce, we have enough room on that bounce for bears to want to scout that lower high to potentially, go lower. Essentially, what these moves are. But when the bulls defended that level, exactly that double bottom level, the bears obviously have to cover their shorts, right? So you can see all this volume coming in, shorts covering as well as bulls buying, and increasing bull volume shoots the stock straight up to the other side. So whenever there's a side that is lacking follow through, that is supposed to be doing what it's supposed to be doing, but it couldn't do it. Just right here, the bears are supposed to break this. They couldn't do it. The other sides would take over. That's how this bull move come in. And for the rest of that, just no red flags on the chart all the way up until now, until this big move in the last 3 days to potentially give us the next room, just like that big move down there. That if this is a shallow bounce, then we'll likely be looking at that drop. So as long as we don't bounce over 0.382, it's a daily bear flag for me. Now we'll see if the Microsoft bulls can hold. It's still in a daily uptrend, even though this is because the pivot's over here. Our pivot of the daily uptrend is right there. So even this is a big drop, as long as we hold above the pivot and continuing of the bounce, then it's still a daily uptrend. Big move is starting to give a little bit of red flag for us. The size of that drop. All right. So if you guys got any questions on any of the charts, let me know in the comments below, as well as feel free to subscribe if you guys made it this far. And if you guys learned anything, please share, like, and comments are always appreciated. And I will see you guys tomorrow for another update. And hopefully you guys understand the significance of these big tech stocks on how the size of these pullbacks and the size of these next bounces is going to shape up the market for us, even though we know that every trend is in our favor for the bulls at the moment for QQQ, other than the smaller time frames like the hourly. Obviously, it's in downtrend, but the weekly, the monthly, the daily is still intact for QQQ. But now they're starting to have cracks in the shape up, so we got to be careful of that. So, like I said, for bull, make sure to take your profits or set your stop losses as well, and potentially play the other side or wait until they pull back on the weekly time frame to add these stocks back, right? So what I was telling you guys about the weekly time frame is that this is one straight move up on the weekly, right? So the most likely scenario is that we're going to get a weekly consolidation, meaning just like this move right here, consolidates. One candle needs to close below the prior candle for it to call it consolidation. So that's what we'll be looking at for the next 2 weeks, even next week or next week, for that candle right here, this week's candle. I'm not going to say this week's candle is going to close below last week's candle, which is quite a bit away. Actually, that's only 1.7% away. It's not that far. But let's say we get one flat day and red day on Friday, and we close right there, right here on that 157. And next week, we just get a slight drop, let's say 0.5% drop, right? That's a weekly consolidation. That means we have closed below the low of the prior candle. So, and then that would see, and then the bull just bought by the dip, and you can see how shallow that retracement would be. on the weekly time frame, right? Here, A to B move. This is the weekly time frame. From this low of the point of this move, this is the pivot, to the high of this point, we haven't even retraced 23% of it yet. That's how shallow that drop is. It may look like a big drop on the shorter time frames on the daily and as well, but let's say we just drop right there, right? That's a weekly bull flag, right? Even if we come down to here, this 348 zone, that's a big drop for us on the indices. If we measure that from the top, 6.4% drop on the indices is quite a bit, right? On QQQ, there's still a weekly bull flag. So we gotta be cautious of the bigger picture, right? Bulls are still in control for the bigger monthly, weekly time frames. So the most likely scenario, what everyone's gonna do on this weekly consolidation drop, everyone's gonna buy the dip because they don't want to miss this again, right? So on that weekly consolidation, you can potentially buy your position back, depending on how shallow this drop is. But if this drop is one straight move down for 6.5%, right? The next bounce on the week consolidation, if we see more weakness on that bounce, we're likely potentially shaping up a weekly downtrend. But that would be like at least 4 to 6 weeks, even like into August, right? But obviously, we guys gotta be cautious of these things on a longer time frame to give us a better edge in the shorter time frames. Obviously, I will let you guys know that as well. If it starts shaping up like that on the weekly time frame, then I'll let you guys know to be more cautious then. But for now, we still gotta give us clarity on the shorter time frames where daily is still an uptrend, right? Unless we start breaking down into these pivots, prior pivots, then that'll be a major red flag. As now we have a lot of small red flags and cracks in the market, just like Google has formed its daily downtrend. So that's the first crack, and we'll see if the other ones will follow. So if the other ones start to follow, the big tech starts to have more cracks. Like Microsoft is having a small crack here now, right? That's a big enough move now that could potentially bears may take over here. So we'll see. Even Tesla too. This is a huge drop, just as well. Nvidia starting to top out as well, so we'll see. That could potentially mark our temporary top for now. All right, that's all for you guys, and have a good rest of you guys' day, and we'll see you guys tomorrow.